Now that the income tax filing due date has passed, the IT department is scrutinizing returns to ensure compliance with tax laws and to catch discrepancies that might have happened due to silly mistakes or for tax evasion purposes. So it is important to know about the common notices issued by the IT department and how to respond to them. Hello everyone, I'm Hemant Abhishek and welcome to a brand new edition of Paisa Wasool, where today we will talk about the meaning of common income tax notices that taxpayers receive and how to respond to them. Point number 1, intimation under Section 143, subsection 1. This is the formal and automated communication from the IT department providing an initial assessment of a taxpayer's return. It informs taxpayers about mathematical errors or necessary changes required in their tax return. This intimation is generally not a cause for worry as it doesn't indicate an order or examination by the IT department. It only pertains to matters like eligibility for tax refunds, due tax, or interest payments. Point number 2, notice under Section 245. This notice is issued when an outstanding tax demand is adjusted against a due refund. It informs the taxpayer about the adjustment and provides them with an opportunity to respond if they disagree with it. The taxpayer can respond with necessary documentation and evidence in case they believe the adjustment is incorrect. Point number 3, notice under Section 142, subsection 1. This is a formal communication requesting additional information, documents, or explanations related to the ITR. This is often issued seeking clarification regarding certain aspects of the taxpayer's financial affairs. In reply, taxpayer must provide details and evidence to support the return, and non-compliance with the notice can lead to scrutiny, penalties, and legal consequences. Point number 4, notice under Section 139, subsection 9. This notice is sent in case of a defective income tax return. The IT department sends it after identifying inconsistencies, inaccuracies, or incompleteness in the provided information. The taxpayer gets 15 days to rectify errors or furnish additional details, and one must respond with accurate documentation as neglecting it can lead to denial of return by the assessing officer. Point number 5, notice under Section 143, subsection 2. This is when the IT department conducts a thorough review of a taxpayer's return. This signals a detailed scrutiny and requests for documents and explanations. The assessing officer conducts an inquiry to rule out tax evasion, claims of excessive loss, and understated earnings. This requires prompt and accurate justifications to prevent serious penalties. Point number 6, notice under Section 148. It is issued when the assessing officer identifies potential undisclosed income or discrepancies in the return and has reason to believe that a taxpayer's income has escaped assessment. This is the precursor to reopening of assessment process to assess and tax the unreported income. Here also, the taxpayer has an opportunity to respond and explain discrepancies or unreported income. Point number 7, notice under Section 156. It is a formal communication to inform a taxpayer regarding due tax that needs to be paid. It is a demand for payment of outstanding tax, penalties, and interests determined during the assessment. The taxpayer is notified of the amount due and the due date for payment. As you can see, not every income tax notice is a cause for concern. However, taxpayers are advised to consult the CA or tax lawyer in case they receive an income tax notice. That's all for this edition. We will return in the next video with some more wealth and investment tips and tax saving tricks. Till then, goodbye, take care, and keep wasooling paisa, because if it's not value for money, it's not worth it.